Hi everyone, I'm Mirela Ciobanu, lead editor with the Paypers, and we are live here at Monetisation 2026, where I am joined by Frank Schwab, and we are going to have an interesting conversation on reconciliation strategy and meaningful fintech innovation. Hi Frank.
Hello.
Nice to have you with us. But before we start, I need to say something about Frank because I was so impressed. Also, after the presentation especially after the presentation that you had on the stage. So, Frank is a professional board member, strategic advisor, and co-founder of Fintech Forum Frankfurt. He is currently serving on the board of directors of Gulf International Bank in Bahrain and on the supervisory boards of Addiko Bank in Vienna and Aufhäuser Innovation Capital Frankfurt. So, as you see, a global presence. So we have the UAE, we have also Europe. But most impressive about Frank is the fact that he's the author of 3 books, 42 Mega Trends Shaping the Future of Banking, Tomorrow's Money, and the Idea book. And even more, he was one of the founders, I think the founder of Fidor Bank.
I was at early stage in Fidor, and I brought, let's say, the open banking and a lot of technology to the bank.
Yeah, and as many of us know from the fintech and banking space, that Fidor Bank was one of the, let's say, pioneers in digital banking, fintech, and neo-banking. Okay, so let's start. You've described yourself as a strategic link between the legacy institutions and fintechs. How does this play out in practice?
So in practice, as being a board member, I chair the Innovation and Digitalization Committee. So out of the board, let's say there are specific committees, and I bring in, let's say, the current discussion around new mega trends in digitalization, new mega trends that affect banking, and I also, let's say, help the traditional banks to look at these trends, partner with small companies, with small pioneers, and that is how it is in practice. So it's rather starting small with a pilot or a small cooperation, then what we would traditionally think about a huge strategy. So it's testing out stuff, allowing that banks are testing it, and also defending within the board or the supervisory board that some of these experiments are failing. Because that is part of being innovative.
Yeah, but since you mentioned about legacy systems or no legacy, I said legacy institutions and these fintechs, how is their approach? I mean, how do big banks or big institutions approach these mega trends, and how do smaller ones? And where are some lessons that we can learn, or what are some struggles that they are fighting when approaching this?
So, what is a legacy bank? To me, a legacy bank is an established bank, successful for decades or even centuries.
Yeah.
So, and that also means they are early adopter of new technologies. So it means already in the 1915s, 1960s, they started with technology and they added on technology every decade. That makes them a little bit unstable. That makes them a little bit, let's say, slow. And of course, they have to maintain a lot of technology. And they have usually a huge customer base. They have significant shareholders, which they have to deal with. And of course, they also need to deal with regulation. So that basically means they need to choose the areas where they can innovate. Because if you are a large established bank, you cannot innovate everywhere at the same time. Now coming to the fintechs, for them it's exactly the other way around. They don't have customers. They have a very small product. They do not have any kind of technology legacy, because they can start building stuff from scratch with the latest technology. Now, how do you bring these two together? Because they have very different starting positions. So you don't want a large bank to fail, right? Because banks deal with customers' money, with our money. We don't want them to experiment with our money and the things are failing. So therefore, they need to be very conservative and selective wherever they innovate in order to have new customer experience, new products and new services. And for the fintechs, the challenge is out of, let's say, their small starting position, how actually to win customers, but also to create a sustainable and valid business model. And in some cases, both worlds come together because the fintech has something the bank does not have. However, the bank has something what the fintech does not have. So the fintech may have a product or a service which is unique, while the bank already has the customer. And this is where some sweet spots are, and where, let's say, fintechs can leverage existing banks, and where existing banks can leverage fintechs.
And can we consider, you gave us an example when you had your presentation with Megatrends, the Kaspi app. Can we give this as an example of reconciliation between these challenges and needs? Challenges for banks, fintechs, and needs of consumers and...
The example of Kaspi Bank, I think that's rather rare. You will not see often, because
but yeah,
it
first,
was already an established bank.
Okay.
And it really turned around the strategy significantly.
Maybe to present a bit, what we are referring to, because some of our audience probably didn't see your presentation.
So Kaspi Bank is a bank out of Kazakhstan, and what makes them special, over the last 7-8 years, they developed a kind of super app, which basically serves the customer not only from a banking perspective and not only from, let's say, new services and offerings from banking like crypto, like peer-to-peer payments, like personal finance, but they also offer direct access to e-commerce, to m-commerce, to shopping. So a much, much broader, let's say, offering beyond banking.
Beyond banking.
So services which are beyond banking, and that changed their revenue mix significantly. But we could argue by now there are 50% traditional services, 25% innovative payment services, and 25% not banking related services and respectively revenues.
Yeah, and since you mentioned not banking related, though it's banking related, first, maybe to name some of the mega trends that you have been presenting today to our audience, and one of them was machine banking will be more about machines. And since you mentioned that this 25% is not about banking, I have a feeling that it's a bit about this more like machine-to-machine payments. So to first tell us some of the mega trends you have been discussing, and then to narrow to things that are not perceived as banking right now, but will be.
So there are two different thoughts. So machines are coming. This week, starting this week, you can buy a human robot in the UK on Amazon.
On Amazon. Oh.
And this week you can start buying a dog robot on Amazon. Dog robot, $2,500. the human robot about $17,000. This is how these things are starting, actually. There will only be a few who will afford 17,000 US dollar, but we are now at the beginning of a super trend which is called robotics.
Robotics, yeah.
So, and if we talk about this machine economy, we will see in some point in time, let's say in 5 to 10 years, that we will have autonomous robots which also will need to pay. And you, as an owner of such a robot, you will give your robot a wallet and you will preload this wallet. And the robot may go shopping or buying grocery at autonomous shops.
Yeah.
And they will not pay cash. They may not even use, let's say, the banking network for doing a money transaction. They may pay with robot and machine protocols provided by either the banking infrastructure or the crypto infrastructure or an infrastructure which is not around yet, but exactly designed for this kind of, let's say, use cases.
Yeah.
And this is what we will see. So just to give you an idea of the size, by 2035, we believe that this will be a market of $13 trillion. So which will be one of the biggest markets. And it's now the time to think about, being a bank, what is your share of that market?
Yeah, and since you mentioned about this type of machine payments, and at the Papers we are a lot interested in topics such as stablecoins, CBDCs, tokenized deposits, and all this. Yeah, when it comes to crypto and digital assets, where do you see meaningful long-term potential? It's the infrastructure that they are building, or is it also the value they represent? Or
so that's the challenge for you, for each startup and each entrepreneur, but also for all, let's say, where do you create value, where you can benefit from that development? It's not an easy answer to that, and people need to figure out. For sure, there will be winners when it comes to the infrastructure, like the discussion around protocol, right? The internet protocol enabled the internet and e-commerce. Like the mobile phone operators, network operators enabled us, let's say, to create an infrastructure, a mobile infrastructure on top of the internet used by the mobile phones. And we will see new infrastructures enabling basically this kind of machine economy. You will here and there, you will already see some first protocols. Some of these first protocols are crypto projects. So they follow the idea of tokenization, and they follow the idea of how crypto and blockchain is working in a decentralized way. And therefore, let's say, it's not clear yet who are, let's say, the winners in that games and which are the protocols which will set the standards. I believe that's not clear yet. However, what is clear yet is that exactly something like that will happen.
yeah, and since you mentioned also this idea that they in a way need to find value, and yeah, we had another expert on the stage today, Richard Werner, that he suggested that rates follow growth, and this led me to this idea of sustainable economical growth. So having all the topics that we talked about in mind, we didn't touch too much on AI, but we had the machine economy, so in a way it's built on data. We talked about crypto and blockchain infrastructure. Yeah, out of these ideas, do you think that they are enabling sustainable growth, economical growth, financial growth?
So we don't know yet, because all this innovation can be used for the good and for the bad. Let's be optimistic and hope for the good. Of course, you can use all these latest and new technologies, for example, to clean our oceans. You can develop autonomous robots who actually clean the ocean, and let's say it's then a matter whether we create a cryptocurrency which incentivizes actually something like that. So let's say you can have so many ideas. Once you merge these technologies, they can be used for the bad. You can create war robots, but you can use it for the good. You can create robots that clean air, clean oceans, and clean the world we live. So is it possible? Yes. Do I hope for? Yes.
That's nice. Yeah, it gives a positive tone. And speaking about positivity, how do you find the Money Motion so far?
I think it's a high energy event. I like the format with the large main entry audience, but also with a couple of side speakers and side speaking events, also especially about the corner with the startups, and also the stage for the startups. And of course, it's a place to exchange ideas, to meet new people and make new connections. That is what human beings are all about. That was the last 2000 years the case, and I'm pretty sure after COVID, where we thought everything will be online, actually we are back physically, and I pretty much believe that will be the case for the next 2000 years as well.
Great. Thank you, Frank, for today's discussion.
Thank you for having me.